So this is
No,
just
got it.
clarity. You're helping me with clarity by just talking about it. We closed September of 20, September 11th, 2020, we closed, and we did the first phase of 27 lots. You know, it's named after my daughter. It's called Haven Ridge. My daughter's name is Haven, you know, so it's kind of like keeping, you know, there's, you know, we're really connected to the deal, but not too connected to where it would make, you know, if it doesn't make money sense. So the second phase, because the hardest thing to get for these small builders and a lot of builders is lots and lands, because it takes so long and it costs so much to get stuff to develop these days. So I feel like I have the gold with all the lots, and the next play would be me raising the money to build the houses. Whether I just hired a contractor to build them, or just acquired like a building company and use that to build them.
Got it. Okay. So are the lots? And if I can just jump in, are the lots? So you're lumping the land that you've acquired with the lots. You're saying that that's really the same thing that you're talking about, right?
Yeah, it's all
or
one.
are they two? Okay.
The first 27, we were able to move the dirt and put the roads in, but the rest is just farmland. So the next phase is 47 lots. But the first phase, all I did is sold the lots to another builder. And I think I'm just leaving too much revenue on the table for the rest of the 300 lots that I have, to not add the building component.
It looks like, okay, so I think I get it, and I don't have any question, but it looks like lots look like more of the low hanging fruits, and then the house build, you know, that seems to be something that's more, you know, there's a bit more risk there compared to the lots that are already there. So if I were you, I just focus on that, make a quick thing on that, and I'd focus on sending out feelers where it's like, oh, you don't have to front load the entire thing. What I mean by that, you don't have to like say, oh, you know, here's our entire big plan for this one thing, and I have to stay stuck in here. I would just send out, do like these people do, and send out feelers. But I focus a lot on the lots, because that looks like something that is, you know, there's less of a risk, and, you know, get the market feedback loop going right away, in terms of both some of the introductions, but also, you know, hitting the market right away. And I target the lots, because it looks like those things are the things that would get the ball rolling in terms of feedback. But that's a hypothesis, but that's what I think is just lower risk. What do you think?
Yeah, I think you got a lot of clarity through that kind of conversation here. I think you're right. I focus on just getting the lots through, and, you know, selling the lots, and then kind of plugging in the building as I can. And like you said, with feelers, maybe, and just keep 5 lots that I build out of this next phase. And then maybe the phase after, I do 20 lots or something like that, but just keep moving with the low hanging fruit per se. And, you know, I'm still making money on the lots. So it's not like it's the end of the world either. So, and I don't have to try to raise so much then, and to move forward. So yeah, I think I have a lot more clarity now on that.
I mean, God, at the end of the day, like, our energy is like limited, right? So, I mean, might as well just focus on the thing that can get the ball rolling as quick as possible. And I think it's the lots, but maybe I'm wrong. Maybe the market is wrong, but I mean, there's like a 99% chance. Ali, correct me if I'm wrong. And this is where we bring the CFAs in, but yeah, because I mean, those things are real. And then, but in the house, if I were to divide my efforts, then you're telling a longer story. There's more variables in place. There are more reasons for people to say no and go back and forth. And then, like, I remember I was working on this, you know, a few solar deals, and then what's funny is that the investors are like, oh yeah, I want the solar deal. And then it's like, oh no, it's part of a fund, and they're like, oh, I don't want it. And that happened over and over. So like, And it takes like a lot of, like it can happen. It's just, it takes a lot of things to set up the fund where, you know, I mean, Ali's fund is a bit different because a lot of it is, you know, asset-based lenders, and then they're different, right? So it depends, right? But my point is, reduction of variables just increases the chances of you knowing what's going on and why people are saying yes or no, right? So
Yeah, I think that's it, you know, because there's just so much clarity in the lot thing. It's like I have purchase agreements, people that want to buy them, they're already pre-sold. It's an easy sale. When I start extending it and to that extra stuff, I'm kind of going off into, you know, fantasy land per se, on and too much unclarity where, hey, let's do the lots. The lots are already sold, pre-sold. We just got to get the roads in, you know.
yeah, and I think that's a better use of your time. And your time is probably, obviously everyone's time is valuable at the end of the day and limited. The investor's time, your time, everyone's time, our time, my time. Because some people, what they do, they'll put everything into one big thing and front load everything, and then work on the presentation so much, and then, you know, find some commission sales rep, put a gun to his head and say, okay, sell it. So so rather than that, I just talk to the market, the people who are writing the checks right away, based on the thing we think is the lowest risk thing and the highest chance of getting funded, so that we can start that feedback loop right away, and then we will know what will get done. Right? So.
And then from that point, I suppose that then I would have, you know, a history of you know, invest working with other people's money and getting it back to them, and then I could go on to another thesis potentially, or you know.
Exactly.
Opens it up a little
Exactly.
bit.
That's what. Exactly. This is what I mean. One of the other members, Abdel. Yeah, Abdel. They're doing two funds, right? One is a Reg D. One is a Reg D, 100 mil. One is a Reg A, 75 mil. And so what they did, they just said, hey, yeah, if an investor wants to take, you know, the deals one at a time, that's fine. You know, you leverage the track record based on that, because optimizing for just getting the deal done as quick as possible. I just will just do whatever they want. We're talking about this a bit earlier, Ali, about is it the investors' terms that we chase, or do we just make our own terms and then make investors come to us? So this is one of those situations where I think it's just getting what the investor terms are, and then as long as the deal can support the terms, you know, go from there.
Yeah, exactly. No, that's got to be a reasonable expectation going into every deal, anyways. You know, that's just the reality of it. But I agree with you, man. I'm there with you.
Any thoughts?
I mean, the other thought I have is, you know, a hard money fund that borrows money to, you know, the builders. And
Yeah.
then if I can also use that fund to fund my own projects in the future, but I also can deploy people's capital pretty safely. And I can have like regular payments because I'll have payments on those loans. And then I can raise as much money as I want. And I could also use it to build houses or to develop land in the future.
How much capital? So I mean, just hypothetically, how much capital will you need to get started for something like that?
Well, there's another outfit in town here in Minnesota. They have about 100 million that they have out. They borrowed at 4% over prime out. And there's, of course, there's a bunch of fees. So the more that they can roll the money, the better. I mean, you get a couple good builders that are doing 50 houses a year. It's not that hard to deploy that much capital.
Yeah.
I think I could come up with a pretty good thesis for that, you know, but I see some of these other guys going, you know, 18%, you know, 20, like, I don't see paying out, you know, I think I'm more in the, you know, 8 to 10% range, or somewhere around 8 to 12, or like Ollie was talking. And I was kind of nervous about that. Maybe you wouldn't get people, you know, interested, but maybe people want something that's, I mean, less interest rate is also seems safer to some people's too, you know?
Yeah.
So.
Exactly. And I mean, the ultimate thing too is this is the hypothesis, right? That we're coming up with. But then the people that are writing the check, that's the market and that's the truth, right? So the thing is that we don't want to, we want to spend, some time in this stage, but then we don't want to spend too much time there. It's just about being on the phone and saying, oh, hey, what do you want? Or and then they have to talk, and then the phone conversations are more valuable than just looking at a website, because then you get the full story behind all the material, all the marketing material. You actually get what they really want.
Okay. I think I've answered my question. I think I've come up with a clear thesis now. And I think I'm going to go the hard money fund route.
Nice, perfect. And on that, and just a little bonus, Ali, I don't know if the thing that, the other product that we're using there, do you think that's something that Mark can use? I don't know if it's in the same sector, but man, yeah. And with that, no, Ali and I were just alluding to, we have different ways of getting funds spun up, and we're working with different partners, but ours is more specialized, I think, in tech.
Okay.
Because basically this is not something that's going to happen quickly or anything, but basically we're going to launch a sister company that directly lends to companies, right? So we'll have more control over, right? So we'll have more control over some of these deals. So, which is good. So.
No, I've been trying to figure this thesis out, for several months now. I mean, I know I only joined you guys recently, but it's amazing how we just talked it through here, and I think I have a lot of clarity now on what route. I know I just said it before, but I really do. This is what kind of been my stopping point in kind of finishing my fund off is getting this correct thesis, but I have clarity now. So thank you, Natu.
Nice.
Appreciate that.
Yeah, no worries. And obviously this is the pragmatic side of it, but because it's kind of like, I don't like to front load too much, because then if I front load too much, then the market changes. There was one example of one of these members, like they're working on an M&A deal, and then they got the terms. It's hilarious. So they got the terms, and they got the terms, like, I think 3 months ago, and then the company grew in revenue by the time that they was about to close, and then it's like, the valuation increased a lot. So you're right, and then it's like, shoot, can we still lend the same amount? And so my point is the market moves fast, and people kind of overestimate kind of sitting down and getting the perfect offer, but then they underestimate actually listening to what people want. So
okay.
Yeah.
So reverse engineering a little bit and putting some teasers out to find out what people want a little bit more, huh? Is that what you're saying? Yeah.
Exactly.
I don't know why it's to me, just figuring out that thesis. I think maybe I'm putting too much thought in. I was putting too much thought into it. It just, I just wanted to fit my story and, have clarity and so.
Got it. Something that can happen. Oh, you go on.
And, having so many thoughts, we all, have like new businesses, new ideas come in, or we could use it for this, do that, we could use it for that, and I'm trying to, like, well, if I was an investor, would I want to be on the other side and invest in that? But I'm not the investor, so maybe I need to, if I do it, I want to create something that works for really good and, makes people, I want to be able to pay people as much as I can pay them, to also be successful on the other side of the fund and not, pay too much out either. So.
Yes.
And,
yes.
So.
Yes, got it. And yeah, what's funny is, man, and sometimes the money component is so important because I remember, yeah, just when a lot of these people they look at what, they look at some of the things that they put money in. I mean, they seem to just look at the financials and the revenues, and the story seems to almost be like, I don't want to say a backseat, but like it can be like the revenues are so important, like the financial story there is just so important, and it just has to align. Um, so yeah, I think the story is important, but I mean, all things considered, I mean, these people they're putting money in, they want money out. Like, and if I were to just keep everything, so that's basically what it is. So
Maybe I put over emphasis on the story. You know, maybe it's you know, coming up with something that is really well, and you've done your homework on it, and it's something that you know is going to work, and you've had accountants look at it, and your financial, it's going to work, and if it works, then maybe it doesn't have to be some story that lines your whole life up together to make that, because a lot of people don't have a story, or their stories are just, everybody's story is different, or everybody's story is changing so often that maybe you're creating the story and now.
yeah, and I mean, the story can be really important when it comes to like mission and vision and principles and things like that. It can be really important. It's just one thing I noticed is that a lot of companies that are these really early stage companies and things like that. So a lot of those companies, they lead with that, and then they only have that because that's all they have, right?
Yeah.
But then you actually have something that is actually worth something right away. So yeah, I think there's nothing wrong with having a story. I just also want you to remember that sometimes like it's just matching up the financial assumptions that line up with what they want, because this is what, like, I mean, when I was originating for a securities dealer, like, yeah, it was just the financials, and then like the good story was good, but I mean, a pre-revenue startup that had a good background. I mean, we didn't care. It's like, because like it was so hard to get done, right?
Yeah.
Yeah.
You mentioned something about the solar deal, or is that something that you're still working on, or is that something that you had closed in the past, or
Oh, there are a few solar deals. There are a few solar deals in different ways. But yeah, no, I was just working with another organization on that, another exempt market dealer out north in Canada. It's like basically it's a broker dealer, and yeah, I brought them on and so on, and I learned a lot there. But then there were two different solar deals as well that I brought on. But it's just really speaking just to the whole, what you can see in a fund structure versus acquisition by acquisition, and people that just want to take control. So that was a big learning point, right? So
yeah, as far as like bringing partners in, and that I've heard that talking to some other people, like creating a syndicate or something, kind of bringing investors in that want too much control can also kind of be a problem if you let that happen.
Yes, it can, and that's why it can really be, maybe not in your situation, but in some situations, that's why if people just have one fund and then everything is on that fund, then then you have that risk. But then if it's just like the other associates said, they have one real estate fund for one purpose, maybe it's almost like a training wheels fund, like a track record fund. Let people take control over it, and then just let the deal get done. That's the hard part that many of the first people have. And then it's like after that fund it gets done, then it's like, okay, then we could be more stringent on the terms because we already have track record. So no new people are going to talk to us that haven't spoken to us before. Right?
Yep. So you're saying that, I mean, getting a deal done versus giving up control is more important in the beginning, and kind of don't look so much at that versus getting the deal done, because you have to have the first deal done. Now you have a track record, and you have some revenue coming in, and then the next one you could not have to give up so much control per se.
Yeah,
Versus not, versus not starting it all.
Oh, sorry for a bit of lag. Not starting it off from scratch, you said?
Yeah, versus not getting the deal done at all. I mean,
Yeah.
yeah.
Yeah, because if the deal's not done, it's kind of like thinking about, it's like balancing short-term, not almost survival, but a lot of people that are in this business, they're doing okay for themselves, but survival in the sense of like the next level. So it's kind of like balancing short-term survival with long-term goals, because it's like, oh, I want to raise for this fund, and it must be like, I'm talking about somebody that, yeah, they have maybe somebody who has really great deals and so on, but maybe they're just a bit more strict on their own terms, somebody who's raising capital, and they're like, oh, the investors must work with these terms, and are a bit more strict. So in these cases, it may be great, but then sometimes if you're not amenable to what the market is telling you, if you speak to every agent you can, you speak to everybody you can, and you're working with more of an esoteric type of deal, it can be a bit better to, because if the thing doesn't get funded, then how can you even do anything in the first place, right? So maybe it's better to just get something funded, so that you can eventually get to your end goal, because you'd be closer to your end goal if you get something funded than if you don't. So, how much can you compromise? So then the compromise is just a balance between, optimizing how fast you can get what you want, right?
Yeah.
And not. So, and the ultimate way to know is, it can be just like looking at the market, talking to the markets, by first hypothesizing what really is the lowest hanging fruits, what is the highest probability of things that you're going to see the biggest amount of market participants for. Just thinking about that, and then reasoning about that, and then after that, then testing it, because our test can be wrong. So it's just to test it, and then based on that, then we see the results and get the feedback, and based on the feedback, we iterate the terms, iterate the offering, iterate the messaging, and then based on that, then we get more replies. Okay, good, we're getting replies. Oh, then we're getting more term sheets. Oh, we're getting more calls, right? And it just blows up in our face eventually if we get all these things right.
Yeah. Yeah, that's great. I've only made it, through a few of the course. I haven't gone all the way through yet, but I've been very pleased so far.
No worries, and we're going to add some more stuff, and we'll throw more meetings in your face as well, so that you can see us, because sometimes we have like 5 people on some of them and so on. So sometimes it's a bit toasty, but 8:00, I'm gonna go eat dinner, and
Okay.
I think let's just congratulate ourselves for making it through another week. So
yeah, awesome. Thank you, Natu, for bringing me on as a panel.